It's a new American law causing a stir around the world, the Foreign Account Tax Compliance Act, or FATCA. Yet very few Jamaicans know what it is. So what is FATCA? Well, the Foreign Account Tax Compliance Act is a piece of legislation signed into law by U.S. President Barack Obama in 2010. But its implications are far-reaching, literally. From Kingston to Kensington, Bridgetown to Bahrain, those whom it affects are all over the globe, and global markets are reacting. Basically, the law says financial institutions outside the United States who do business with the U.S. will be penalized if they do not report the financial statuses of their U.S. clients to the American authorities. So if you're deemed a U.S. person living in Kingston, your bank will be required to report your financial information to the Internal Revenue Service. And if you've got more than $50,000 US invested or deposited, 30% of it will be remitted to the Americans. It's a nifty way for the United States to widen its tax net and earn more revenue for its coffers. But for financial institutions around the world, including those in Jamaica, it's proving a bit of a headache.
This was an attempt by the United States government to go after tax dodgers, people who owed taxes in the United States or who were liable for tax in the United States, but who had these funds offshore. You'll recall the then Senator Obama was concerned about large numbers of Americans who had funds in accounts in the Cayman Islands and all across the world. But unfortunately, the law is one that's applicable worldwide, and therefore Jamaica and Jamaicans are caught in the net.
The law has implications for all U.S. persons living outside the United States and not just naturalized Americans.
One who holds U.S. citizenship, one who has a U.S. green card, a U.S. birthplace. And as I go through all of these, you begin to ask the question, how will the local financial institutions know, have some of this information? A U.S. residence address or a U.S. correspondence address, including a P.O. box. If there are standing instructions to transfer funds to an account maintained in the United States or directions received regularly from a U.S. address. If you have an in-care of address or hold mail address that is a customer's sole address in the States. And finally, if you have a power of attorney or signatory authority granted to a person within a U.S. address. All of those would make you a U.S. person according to the Act.
So if you do any of the following as a substantial portion of your business, you should be taking note of FATCA. Do you accept deposits, hold financial assets on behalf of others, or are you engaged primarily in the business of investing, reinvesting, or trading in securities, partnership interests, or commodities? And here's what you'll be required to report to the IRS on all your U.S. clients: their names, addresses, and taxpayer identification numbers, their account numbers, their account balances, gross dividends, interest, and other income paid or credited to their accounts.
It's a very broad definition, which is going to be one of the challenges with the implementation of the law, in that institutions like Jamaica National and others will have to determine who is this American person.
You're going to now have to get the consent of these individuals that in the event they have assets in excess of 50,000 US and over, that you're authorized, the institution that it is authorized to provide the information to the IRS in the United States.
Local firms say FATCA's reporting requirements have legal and financial implications. For one, they'll have to determine who among their current and potential customers are U.S. persons. Then they'll need their permission to surpass the secrecy requirements of local banking laws.
The systems of internal control and management will have to be modified to capture the data. So if you think about it, your computer systems will now have to be so modified to determine and to leave space for recognizing who is an American person, what are the attributes of an American person. We will have to go through a process of looking at all our customers from this day backwards to determine who among the existing membership and clients are American persons. It will mean communicating with individuals for them to disclose to us their status with the United States. It will mean going forward, ensuring that as we capture information about our clients, we're going to also now capture information about who they are as citizens or where they're domiciled as we go forward.
But it's not something firms can avoid. Those who do not comply face stiff penalties from the U.S. government.
If you're a financial institution and you don't agree to this, and you have interest or dividends in the U.S., they're going to take off 30% of your money. At the end of the day, your margins are not going to be that large for you to be able to afford it.
Those penalties do not kick in until January of 2014, but financial institutions around the globe must indicate their intention to comply by June of 2013. Firms are being encouraged to start preparing.
What they need to be doing is, one, make sure they understand what the regulations require. Two, now is the time to look at your systems. Bring in the experts, determine what internal controls need to change, what systems, what computer programs. Your forms are going to have to change in terms of what information you ask when somebody opens a bank account. There is some lag time for existing customers, but you need to look at your system to determine what now you need to get from your clients in terms of to make sure that you're not breaching the rules.